Hey everyone, welcome back to Bell's Accounting, Tax, and Notary Services. I'm Randy Bell. In this video, we're diving into the top tax fixes you cannot afford to ignore before 2025. Let's get started and help you with your taxes. Let's be real, nobody wants to work forever. Contributing to your retirement accounts isn't just good for your future, it's amazing for your taxes today. We're talking about accounts like your 401k and Roth IRA. Contributions to traditional 401ks and IRAs are often tax deductible, lowering your taxable income. With a Roth IRA, your withdrawals in retirement are tax-free. When you invest inside these accounts, your money grows tax-deferred. This allows your investments to compound and grow faster than in a taxable account. The more you contribute and the earlier you start, the more time your money has to grow tax advantage. Start planning now for a financially secure future. Let's talk about a tax-saving powerhouse, the Health Savings Account, or HSA. If you're enrolled in a high-deductible health plan, an HSA can save on healthcare costs and taxes. You contribute pre-tax dollars, lowering your taxable income. The money in your HSA grows tax-free and can be used for qualified medical expenses, tax-free. Unlike flexible spending accounts, HSA funds roll over year after year. Build a nest egg for future healthcare costs in retirement. Tax credits are golden tickets to lower your tax bill dollar for dollar. Unlike deductions, tax credits directly reduce the amount of taxes you owe. Let's focus on a few big ones. The child tax credit can put up to $2,000 per child back in your pocket. The Earned Income Tax Credit helps low to moderate income working individuals and families. Education credits, like the American Opportunity Tax Credit and the Lifetime Learning Credit, offset college costs. If you're hitting the books or have kids in school, these credits are worth exploring. Every dollar counts, so make sure to take advantage of these credits. Lower your tax bill and keep more money in your pocket. Let's talk about your tax withholdings. This is the amount of money your employer withholds from your paycheck for taxes. If you're withholding too little, you could end up with a hefty tax bill. If you're withholding too much, you're giving the government an interest-free loan. The IRS has a tax withholding estimator to help you figure out the perfect amount to withhold. Review and adjust your withholdings to save headaches and potentially put more money back in your pocket. Get your withholdings right and avoid surprises at tax time. Let's talk about capital gains and losses. When you sell an asset for more than you paid for it, you have a capital gain. Uncle Sam wants his cut, but there are ways to minimize your capital gains tax liability. Hold on to your investments for longer than a year to benefit from lower long-term capital gains tax rates. Offset capital gains with capital losses to reduce or eliminate your capital gains tax liability. Use losses to your advantage and keep more of your hard-earned profits. Smart strategies can help you master capital gains and losses. Plan ahead to minimize your tax burden. There you have it, your roadmap to tackling crucial tax fixes before 2025. Thanks for watching. If you found this video helpful, make sure to subscribe, like, share, and comment below. For more tips and personalized tax advice, visit Bell's Accounting Tax and Notary Services. See you next time.